This is a very important message for all crypto traders. Roughly about 75% of all US crypto traders are affected by this. I want you to listen up. This is one of my most important messages I put out for a long time. First of all, why are 75% of crypto traders involved? Because the IRS knows that 75% of crypto traders are not reporting their crypto income on their tax returns. Now, a lot of those are small traders, but they're really more interested in the large traders, and this might be you. Listen up. There's several big events happened. I want to go through them. First of all is the 1099 DA, and then I want to talk about Bitcoin Jesus and how that affects us, and then I want to talk about Paco and what happened with him and how that affects all non-reporting crypto traders. First of all, a lot of people are concerned about the IRS auditing them. How do they do an audit? The primary way is to look at unreported income. The IRS learns about how much income you have through a lot of different sources of people paying you, W-2s, 1099s, K-1s, and they add it up to see the total amounts that you have received in proceeds, and then they compare it with your tax return. And if yours isn't in the neighborhood of theirs, then they're going to come after you. Now, recent news event was the publishing of a draft form of the new 1099 DA for digital assets. A lot of talk, a lot of excitement, consternation about this. I want to draw your attention to a couple things that I find particularly important is that these forms are generated every time you do a trade on a US-based crypto broker, which also includes US-based DeFi exchanges and unhosted wallet providers. They have to report the wallet addresses that were involved in the transaction and the transaction hash number. So what does that mean? That means that that information about your wallets and the transaction hashes are being reported to the IRS. And this brings us to the very important indictment of Bitcoin Jesus, Roger Ver. Now, I'm not going to speak about whether he's guilty or not, but when you read the indictment, you learn about a new technique that the IRS is using. I call it portfolio reconstruction. What the IRS did was they gathered these addresses, some of the known addresses they had about Roger Ver, and then they went through a blockchain analysis tool combined with emerging AI technology, and they were able to determine the cluster or the group of Bitcoin addresses that Roger was using. From that, knowing those addresses, they could then go back in time to do a portfolio reconstruction. They were able to determine that in 2014, allegedly, he had 200,000 Bitcoins. He had a form that he filed with the IRS at that time where he had to declare his total assets, and he didn't report anywhere near that amount. And this is one of the reasons why he was indicted. So what we see is that the IRS is using a totally different technique to find out who is underreporting. So they're looking at that portfolio reconstruction, and then they compare it with the 1099 information and other information from your tax return to see if you're reporting everything that you should have. The second thing we learned from the Bitcoin Jesus indictment is that 2017 and 2018, they took the same information and they identified transactions that he did with Bitcoin, and through their machine learning process, they were able to determine which of those transactions were a change of ownership, a sale, if you will. And they could see that these were sales and that they were not reported on a tax return, which he would have been obliged to have filed. And that is the second basis for the indictment. Now, this is very important to everyone, that the commissioner of the IRS released a strategic operating plan talking about how they're using AI and machine learning tools to go after particularly cryptocurrency complexities. So if you're somebody who has not been reporting, you need to get in gear because those days of hiding are coming to an end. I want to bring your attention to a recent indictment in March 2024 of a guy named Paco Algreen. He was indicted for not reporting Bitcoin sales in 2017. That's all he did wrong. There wasn't any, money laundering. There wasn't any drugs. It was just on his tax return, he didn't report $1 million or $2 million of crypto sales. And they did a criminal indictment on him. What does a criminal indictment mean? Well, it means that it's not an audit, it's a criminal indictment. He's charged with felony, criminal tax evasion. The cost is $250,000 penalty plus 3 years in prison, up to 3 years in prison. Typically, you'll serve less than a year, but you'll still be a felon for the rest of your life, which will destroy your reputation for the rest of your life. Not only that, you still have to file and correct the past tax returns to report all the income, because if you don't, they'll come after you with a civil fraud penalty of 75% on this unreported income. It's very, very serious. I have clients who have gone through this sort of thing. I speak from knowledge about what's involved. I just want to bring to your attention that the IRS is using great technology. They are changing the playing field. They know your DeFi transactions. They're reconstructing this not just for Bitcoin, but other blockchain layer ones. It's time now is to take advantage of this remaining window of time before the IRS identifies you and calls you out, so that you can get your tax situation cleared up. Call us at Crypto Tax Audit, schedule a call with me, and we can discuss a plan to help you transition to a compliant place and to put peace with the past. Hey, Roger Ver had 200,000 Bitcoin, and he was trying to hide it at a time when Bitcoin was only $800. Now it's in the 60,000 range. If he had paid his bills back then, he wouldn't have the problem now. So this is a very serious message, and I don't want U.S. crypto traders to be hurt. The IRS has already said they're increasing their audit rates by 50% next year on middle to high income crypto traders. So please call us, sleep well at night. Make your money, pay your taxes, then go make more money.
Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. You have tax questions that we can apply to. We will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton is one of the top experts in crypto taxation in the US. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.